This lesson is to go over 12.2, determining payroll tax withholding. We have 3 objectives. You need to be able to demonstrate the process for determining federal income tax withholdings. You need to be able to demonstrate the process for calculating Social Security and Medicare taxes. And you need to be able to explain the benefit of funding medical and retirement plans with pre-tax contributions. So payroll taxes are taxes that are based on the payroll of a business. Withholding allowance is a deduction from total earnings for each person legally supported by a taxpayer, including the employee. Payroll deduction, any amount withheld from an employee's gross earnings. So this is a quick little video on how to fill out a W-4. I will have this linked on my Canvas classroom. So if you have ever filled out a W-4 or if you have not, this is a really good video that walks you through those different steps and what those withholding allowances mean. You would also go over this in our personal finance class. This is a class that I really think that all of you should be taking because it will teach you everything that you need to know about your personal finances. And those are just life skills that you need to know. Here's an example of what a W-4 looks like though. So you'll see some information up at the top, like our name or our employee's name and their address. Their Social Security number will be listed. They also will have their marital status listed. And then here's where we're going to see our withholding allowances. So that video that I just talked about on the previous slide, that's where she talks a little bit about those withholding allowances and what those mean. And then it needs to be signed by the employee and also dated. Now we're going to look at our employees' income tax withholding for single persons, and then I'm just going to go to this next one. So this is for married persons. So we have 2 different tables depending on their marital status. What we are going to look at is their wages. And so when we look over here, we're going to find where their wage fits. So this is based on at least, and this is but less than. So here we would say, okay, so they made at least $900, but it was less than $920. Okay, then what we would look at is their number of withholding allowances. So if they had 1 allowance, we would then just meet those 2 up. So that would mean that we would withhold $67 in taxes. Now, the example that we were looking at, I think his name was John. John had 4 withholdings and he was married. So this is the table that we want to look at for him. We're going to locate the employee's total earnings. So this is the bracket that he's going to fall in for his total earnings. And then, like I said, he had 4 withholdings. We are just going to go down and across till those line up. And then here we have 29. Now, when we're doing this, I would say the biggest thing is making sure that we stay in the correct column and we stay in the correct row. You will use your tables from your book to do this. And one thing that I would say that would be beneficial is maybe having like a piece of paper or something. Then you can line that up underneath the row to just make sure that you stay on the correct row. If you get this one number wrong, it's going to throw off the rest of your numbers. It'll be that snowball effect. So it's very important that you get the correct number from this. Here we have some more terms. Social Security tax is a federal tax paid for old age, survivors, and disability insurance. Medicare tax is a federal tax paid for hospital insurance. Accumulated earnings is the total gross earnings year to date for an employee, and then a tax base is the maximum amount of earnings on which a tax is calculated. When we talk about this Social Security tax and this Medicare tax, again, I'm going to pitch that personal finance class. You're going to learn more about those taxes in that class. In this class in accounting, we're going to just more figure out the process of for an employee and how we withhold those taxes, but we're not going to spend a whole lot of time talking about what those taxes are. Same thing with these, the retirement plans. So in personal finance, you're going to go in depth over what these different retirement plans are, benefits and negatives about each of them, and how maybe which ones would fit best for you. Okay. Again, in accounting, however, I'm going to give you definitions of what these are, and then we are going to talk about the process of calculating how those come out of our employee's paycheck. So a qualified retirement plan is a retirement savings plan that's approved by the Internal Revenue Service, the IRS, that provides individuals with a tax benefit. A 401k is a qualified retirement plan that's sponsored by an employer. An IRA, an individual retirement account, is a qualified retirement plan that provides most individuals with a deferred federal income tax benefit. And then we also have a Roth IRA. A Roth individual retirement account is a qualified retirement plan that allows tax-free withdrawals from the account. So these three things are qualified retirement plans, but each of them are a little bit different. Number one, where does an employer get the information used to determine the amount of federal income tax to withhold from employees' earnings? We would get this from the W-4 and the employee's withholding allowance certificate. Number two, employee federal income tax withholdings are based on what two factors? The marital status, and then the number of withholding allowances. Number three, does the employer or the employee pay Social Security tax and Medicare tax? So on these two, both the employee and the employer are going to pay Social Security and Medicare. And we'll get into that a little more in the next section. What is the difference in the tax impact of contributions between a 401k, an IRA, and a Roth IRA? So the only contributions to a 401k and an IRA are going to be deducted from earnings before payroll taxes are calculated. Now, like I previously said, you're going to go over these more in depth in personal finance. Number five, are the withdrawals from 401k, an IRA, and a Roth IRA subject to income taxes? The withdrawals from a 401k and an IRA are going to be subject to income taxes, but withdrawals from a Roth IRA are going to be tax-free. So what that's really saying is that when we take money out of a 401k and an IRA, we are going to have to pay taxes on that. But a Roth IRA is going to be tax-free when we take out those withdrawals. Okay, that was the end of 12.2. You can now go on to the 12.2 work together. I would suggest that you open up your book either on MindTap or have your physical book out because we will need those tax tables for the 12.2 work together.